Ladies and gentlemen, good day and welcome to Greenply Industries Q4 FY24 earnings conference call hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution by referring to such statements and remarks. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhatelia from Asian Market Securities Limited. Thank you, and over to you, Mr. Karan.
Thanks, Manuja. Hi, everyone. On behalf of Asian Market Securities, we thank you for joining us to the Greenply Industries 4th quarter and 12 months FY24 conference call. In the panel today, we have Mr. Manoj Tulsian, Joint Managing Director and CEO, Mr. Sanidhya Mittal, Joint Managing Director, and Nitin Kalani, CFO. May I now invite Manojji to begin the proceedings of the call. Thank you, and over to you.
Thanks, Karan, and good morning, everyone. It's a pleasure to have you all in this call. I'll be updating you on Greenply's operating and financial performance for quarter 4 and FY 2024. First of all, I'm very happy to share with you all that we have achieved a consolidated revenue of 600 crores during the quarter, excluding revenue from discontinued operations, a growth of 40.4%. The discontinued operations refer to our Africa business operations controlled by our Middle East entity, GMEL, in which we have given up majority control during the last quarter. We have received the purchase consideration and effectively deconsolidated the operations as we move into the new year. We are referring to all the numbers, whether for this year or the comparable numbers for last year, in this communication without GMEL, unless specifically called out. Our revenue CAGR in FY24 over the financial year 22 is almost 26% on a comparable basis, much ahead of our earlier guided revenue CAGR number of 22% for this period. During the quarter, our consolidated EBITDA has also grown by 22.8% on a YOY basis to rupees 59 crore, and the margin during the quarter was at 9.9%. The full year consolidated EBITDA, excluding the discontinued operations, is at 191 crore, an increase of 12.6% YOY on a comparable basis. Now I'll share some highlights of business-wise performances. In our plywood business, our growth for the quarter was 9.4% YOY. We have achieved our annual guided target growth rate with a YOY volume growth rate of 8.6% for FY24. We guided a volume growth rate of anything between 8 to 10%. On the margin front, our adjusted core EBITDA margin for the plywood business for quarter 4 was at 8.6% as against 11.5% in quarter 4 of FY23. The margin declined on a YOY basis by almost 290 basis points due to increase in raw material prices by almost around 1% and higher advertisement expenses by around 1.8%. The EBITDA margin, however, improved by 60 basis points on a QOQ basis. Our profit after tax for the quarter was at 29 crores, which includes the impact of gain on sale of 51% investment in GMEL to the extent of 4.5 crore. Moving on to MDF business, our revenue in quarter 4 was at rupees 131 crore and volume at 45,764 CBM. I'm happy to share with you all that we have also improved our EBITDA margins during the quarter to 14.1% as against 13.5% in the previous quarter, and we have delivered a PAT positive performance during the quarter. This is practically the third full operating quarter. So, we are very much on our guidance and our hard work that within the first year of operations, we will make this PAT positive. Of course, more details on the MDF business will be shared by Sanidhya. On a consolidated basis, our net debt level are at rupees 502 crores against previous quarter debt level of 497 crores, excluding the GMEL, which is well within our guided peak net debt level of 540 crores as mentioned earlier. During the year, we have also made investments in our hardware JV amounting to rupees 25 crores, and the commercial operation of the JV started in the month of March. The JV is likely to commence full phase 1 operations by end of June, mid-July, and is expected to benefit from upcoming BIS implementation of certain furniture hardware products. With this statement, I would like to hand it over to Sanidhya to provide more insight on our MDF business.
Thank you, Manojji, and good morning to everyone on the call. In our MDF business, we are progressing well. I am happy to share that we have achieved a revenue of 131 crores and also having a positive PAT in this quarter, ahead of our original plans. It is a result of our meticulous planning, team effort, brand strength, and commercial discipline. During the quarter, we've installed a few short cycle presses as well as ramped up production of our pre-lam MDF boards. Being a premium player, we'll be introducing other innovative value engineered products to serve all categories of customer segments going forward. We are also confident of achieving better margin profile in the business as we enter the new financial year. The full year volume of approx 125,000 CBM was 25% more than what we guided for volume targets, as we had guided 1 lakh CBM for FY24. In the last quarter, we have sold 45,764 with a blended realization of 28,640 rupees per CBM. On a year-to-date basis, our sales realization per CBM is 29,279. As we progress in the new year, we'll be focusing on capacity building for value-added products, working on operational efficiencies, and improving yields. With this perspective, I would like to open the floor for Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi sir. Congratulations for a good set of numbers. Sir, my first question is more data keeping. If you could please help on the volume split on the ply side between premium and others on volume as well as value basis for Q4 this year, last year, and if you can help with full year number also, that would be great.
Hi Ritesh, good morning. Listen, you have the numbers? Volume and value numbers. See, the mix has not changed. I was looking at the mix between Q3 and Q4. The mix, I think, is almost same. We'll just give you the volume value numbers. You can speak out to them.
Sir, meanwhile, can I just have a few other questions till Nitinji has the data?
Sorry?
Meanwhile, can I ask few other questions till we have the data points?
Yeah. I think we'll get back on this volume value data. It is very similar to Q3, which I had seen. I am not carrying the numbers right now. We'll get back to you on the same. Please go ahead with other questions.
Right. So the reason to ask this question, basically, if we look at the Q3 data, we see a steep jump on X premium as a category. I think it was upwards of 23-24%, whereas for premium there was a decline. So just wanted to ascertain, is this trend something which is the new normal that we are looking at, whether we have tweaked our strategy on placement on economy side to actually drive more volumes? So that was the question that I was coming to.
Okay. So I think, Ritesh, if you clearly see the trend is the growth has come on the mid segment. Okay. This year the volume growth, whatever has come, is purely because of the growth in the mid segment. the premium segment has hardly grown. I mean, if you truly ask me, I think it is around a 1% growth what we have registered there.
Flat.
So going forward, we might see a similar trend. So we have a separate team which works on the premium side of the product. There is a separate team which works on the mid side of the products. So growth is something for in any case we are going to taper it. We are going to work on the growth. We are not going to leave any of these segments. We have product lines. Yes, as a company, of course, anyone would desire that the premium segment should grow because that clearly helps the margin profile also to improve. There is a team which is working. We have been increasing our ad spend. We have been doing a lot of things strategically also to see how we are able to get more into the market with our good set of products in the premium category. But yes, last year we didn't see any success. Maybe, the silver lining is at least we have not degrown on the premium segment in absolute terms.
I'll handle that question on volume.
And the data on value volume is now there with Nitin. He will just.
So Ritesh, good morning. The volume for premium brands was flat year-on-year, basically for the quarter. And for our economic segment, it was plus 13% in terms of volume, and value was plus 12%. This is only for ply, and other segments grew more than, I would say, high teens, basically.
Sure, this is helpful. My second question is on MDF. Sir, would you like to put some volume guidance number for the next fiscal, along with some color on value-added products, along with something on the margin profile, and how do you see the macro evolving over, say, next 6 to 9 months? That's the second question. And third question is more pertaining to furniture fittings. I'll come to that.
So Ritesh, see, in terms of overall volume growth, we have taken an internal target of trying to achieve 200,000 CBM volume for the full year. Okay. And but the rest of the thing I'll request Sanidhya actually to ask in terms of between value-added products and how he's looking at the market. So these questions, Sanidhya.
I think market, as far as the realizations of the competition it is challenging. But our advantage at Greenply is that our capacity is very limited compared to other players in the market. So we have the power to say no, and we are trying to focus more on trade and less on OEM. So we've kind of restricted our overall OEM business at about 13-14% of our top line. And the balance, 85-86% is now coming from, or maybe 87% close to, is coming from trade. So I think this will really help us as a strategy for the first line, till we have only one line up and running. And this way we can ensure that even in tough times, we can maintain our margins and we can maintain our paybacks, etc.
The market overall looks good in MDF. We continue to assume that the market will grow at a pace of around 15%. So that surely gives us a lot of tailwind in the MDF business. And for us, what we need to concentrate is that one, we are able to consistently produce and deliver. Second, as we have said earlier in our calls, that we continue to build up on the internal efficiencies, because that is the key. And we have always maintained that takes time, but I think we are on the right path. And that's how you will see that, almost every quarter you will see our margins improving.
This is helpful. And sir, last question on furniture fittings. In the last call, you had indicated a revenue of 300 crores in 3 to 4 years with margins of around 20%. Would you want to revisit those numbers, or if you can give some specific color for the fiscal ahead, what we will look to target, along with margin profile, ROC profile? Thank you so much.
No, there is nothing actually revisiting those numbers. Okay. First year, we actually, first thing we have set up the plant at a very rapid speed in 6 months. Yes, when you do so many things at such a rapid pace, there are a few machines, other things which we were expecting to come by March or April because of sea shipment and other things. A few of them has got delayed. That's why we are assuming that come July, we should be in a position to start manufacturing the products what we had put in our business plan. And in terms of the other preparation, like getting the team in place, we have most of the teams in place. I mean, at least the head of functions, the team below them are getting recruited. Most of it are in line, they will get completed within June. So from quarter 2 of this year, our sales will start on that business. First year, we are not expecting any big numbers. The first year maybe we will slightly be incurring some loss also, because initially we'll have to invest also on the marketing side to showcase this product to the whole of the market and trade. So first year, in any case, in our business plan, there is a minuscule loss possibly which will be there. Next year, we can see major ramp up in terms of numbers. And next year we will also try to see, though it's slightly early, but we'll try to see that at least next year we are not at all at PAT level, we are at least at quits, or if we are able to generate some profits. Year third, which will be actually after 18 months, we definitely expect this business to get ramped up to anything beyond 200 crores as an annualized revenue with a healthy EBITDA. What I've also said is, this business, the type of capacity what we are going to set up in phases, which will be with a total investment of close to around 250 CR, can give us a revenue of almost 800 crores. And as and when we are able to reach to a level of 500 crore plus, the margin profile can even further improve to 25% and above, because these are purely high-end engineered products.
This is very helpful. Sir, I'll just squeeze in last one. You can take it in the forthcoming questions. So the CapEx guidance for next 2 years, and do we have any balance sheet targets in place? How do we look to leverage?
I request you to rejoin the queue. Thank you. The next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yeah, hi sir. Thank you for the opportunity and congratulations on a good set of numbers.
Thank you.
So firstly, on the MDF front, I mean, you have displayed a good resilience, but we have seen your ASPs coming down with the industry. So how do you see this price movement panning out with, imports likely to go up again from this month? And of course, the capacities are coming up.
I think, we mentioned earlier also, the fact that we have only one line which is up and running, we have the power to say no, because we have limited capacity and we want to focus, being a premium player and a branded player, we want to focus on the value added segment and the trade distribution network, which is pretty set, and month on month we are getting progress there, and we are kind of restricting our plain board sales and our OEM sales to ensure that our bottom line is not impacted and we can grow healthily, sell our production into the market. So as far as our capacity is there, we are not worried to sell it.
Understood. And just secondly, like Ritesh was asking previously, what will be the capex plan and the debt reduction that you'll have in mind for next 2 years?
So Udit, I think this year, in terms of whatever visibility right now, what we have created, we might look at a capex of anything around 70 to 80 crores as a company. And the subsequent years, we are still not chalked out our plan. So maybe we'll get back to you in quarter 2 or quarter 3. And in terms of debt profile, I think this year, from 500 crores, we might look at a reduction of 50 odd crores. So maybe a net debt of 450 crores by the year end is what we are targeting, which clearly will further strengthen our debt equity to maybe around 0.55 or between 0.55 to 0.6.
Understood. And so this the follow up, this 70-80 crores of capex includes your any further investment that will be required into this Samet JV?
Samet JV, yes. Our total capital commitment is close to around 40 odd crores. We have invested 25 till 31st March. While we speak, we have put another 5 or 6 odd crores, and so the balance, 9 or 10 crores will come during this year only. If there are any other cost overruns or something, a few cost overruns we have envisaged as per the first project, first phase, not big numbers. So that might be incremental, because initially what is happening is a lot of money is also going into GST credits another thing which we'll be able to recover over a period of time. So we might have to put maybe extra 4-5 crores every JV partner. So 15 to 20 crores is what we are going to put.
Over and above the 76.
Of course, that is investment right now. So 15 to 20 crores is something what we are assuming that will be funding this year further.
Got it. And lastly, sir, on the plywood front, if you would like to give any guidance for 25, what kind of a growth in volume terms are you looking at with the margin profile?
So as I have been maintaining previously, also 8 to 10% is what now we have taken as an internal target. Given the situation right now. Yes, last few quarters have not been so great in terms of any tailwinds. Even, when you look at quarter one might remain subdued. Like last year also, quarter one was subdued. This year, quarter one might remain subdued, not only from a demand perspective, but also from, this general elections which is going on, which will slightly maybe dampen the spirit at this point of time. But, my assumption is from quarter two, and if we are able to see a stable government, there will be a big tailwind which I am envisaging from quarter two, and if that happens, then 8 to 10% volume growth for us as a company should not be difficult.
And the margins, would you be able to maintain if at 8 to 10% volume comes up, then the current margins? Do you see any improvement with the product mix changes or something like that?
So I'll not commit at this point of time, but we are taking again a lot of internal initiatives to see every rupee what we are spending. There was a challenge in the previous year in terms of truly taking a price increase from the market, but this year in phases in markets we would be looking at doing some corrections which can help our margin to improve. As I said, there is a significant thrust on the premium end also to improve the volumes there. So if that happens, that also will help us to slightly improve our margins. Our ad spend last year was almost high by 1.1% on an annualized basis. So that is another factor also which brought down the margins. But if we need to invest in the business and we want to create this business for future, then I think those type of initiatives and strategic calls we'll have to live with. So that was the type of investment which went last year. This year also we have planned that in absolute value our marketing spend is only going to go up, but maybe as a percentage of the total business it might be at the same level or it might slightly come down. So with these initiatives for sure I'm very hopeful that our margins on the plywood business only should improve by 50 to 75 basis points, if not more.
Got it, sir. Got it. And just to clarify, this 1.1% of advertisement that was up. So what was the total percentage as to revenue? Your ad spends for the year?
Was it there in our presentation? The overall ad spend was
3.7. Yeah, it's there in the presentation.
Sure. Okay, I'll note it, sir. Thank you so much for your elaborate answer, sir.
Thanks. 3.4.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, good morning. Thank you for the opportunity. Sir, can you help us with the timber prices for the fourth quarter FY24? What was it for the plywood business? I'm asking first. And what was it like in same time last year?
Achal, I don't have the numbers right now, but
it was around 9,500 for plywood, and for
no, previous year is asking.
Previous year was 8,000.
I think Achal, this year though it was around 9.5 rupees in that range. But look, we buy this material at different places in this. So on an average, this was the price. If I recall, I think last year similar time it was somewhere around maybe 7.7 to 8 rupees.
Okay. And how has it moved in this quarter, first quarter FY25? Has it further gone up, stabilized? And how do you see it?
No, it is not. It has not really gone up further. It is in the same range. And but I also don't see any chance of this coming down during this financial year.
Okay. And if I see from, let's say, 3 or 4 year perspective, because we are seeing this timber shortage or scarcity for last few years now.
Yes.
You know, how do you see this? You know, has that been passed on by the peers, especially the unorganized? You know, what has been the price increase given the mix? Obviously, we are unable to figure out. But like-to-like product, how much have we taken price increase over last, let's say, 3 years? Would you have that number?
Ballpark, I can tell you. If I remember, I had seen some data. So maybe if you really see, the realizations have almost gone up by around 10% in the last 3 to 4 years. Okay, so that is the type of increase which I can say has happened, more or less broadly. But the last year was, I think, a difficult year in terms of pass on, and even unorganized faced a lot of challenge because of the increasing prices. So these are good signs if you truly see for you know, the large branded players, national players. Second, you asked about the trend. I think in terms of the trend, I am extremely hopeful that we are nearing this end of this cycle in next 12 to 15 months in terms of this higher price. We'll see good amount of volumes coming back into the market, and when that will happen, we'll see the prices to drop. So next year means FY26, somewhere in the second half, we'll definitely come across a reduction in these prices of raw material.
Understood. Nitin, if you could help with the mix of the premium, you have talked about the YOY change, but would it be possible to get that number? How much was the mix of premium plywood in terms of volume and value for a
43.57, if I recall, Nitin, you can just check. Huh? 43.57. Yeah, it is 43.57 Q4. Q3 was almost.
Volume. 43.57.
Sorry, 43% is premium volume, and how much is value?
No, 43% is the economy brands, basically 43%, and 57% is our own manufacturing, which is the premium brand.
And this is volume. How much would be economy as a percentage of value?
Value would be 35% economy, 35-36%, and 64% premium.
Correct. And this is for fourth quarter or for the full year, Nitin?
It's only for the fourth quarter.
And would you have that for the full year?
Full year, I'll get back to you.
Sure. One more question I had was with respect to ESOP charge. Would you be able to quantify how much was that for fourth quarter FY24? And
full year was around 3.5 crore. You know, I was reading it somewhere, and quarter 4 was very minuscule.
30 lakhs.
30 lakhs, yeah.
Okay. And it will remain kind of this for coming quarters, or is there a change?
At this point of time, I think it will have this run rate only.
Okay. Understood. You know, I wanted to check on the MDF, you know, with respect to, while obviously you are focusing on the retail part of it, but, you know, the pricing part, how do you see that evolving? You know, do you see a good 5, 7, 10% kind of a drop likely? And in that case, because you've talked about improvement in margins, would that still remain? And what will drive that margin improvement?
I think if you see, you know, if you see our realization quarter on quarter, I think our realization dropped from quarter 3 to quarter 4, and in spite of the realization drop, there's an improvement in margin. I think it's mainly because of improving a lot of operational efficiencies at the plant level. So that is one reason why the profitability has improved and will continue to improve, I feel, number one. Number two, going forward, one has to really focus on the value-added products and the right mix. So if we are focusing on the right mix, on the average, our realization per CBM should not be further affected. At least that's what, you know, we're wanting. And another reason why we feel that there won't be further price drops is because the entire industry, the raw material prices are going up. So in this kind of a scenario, I don't think any of us have room to actually take a price cut further.
Right. Sunny, sorry, if you could elaborate a bit with respect to the RM price for the MDF, how much was that for us? QOQ, what has changed? How much has it changed, and how do you see it?
Oh, QOQ, it's slightly come down, but it's kind of flattish only. I would say it's around 6,000 rupees per ton. I think it was slightly higher in the prior quarter.
Okay. And with respect to value-added mix, would you be able to share what is the current number? What is like medium-term target?
I think the current number is mentioned in the presentation, right? Nathanji, what is the number? Prelam number, how much are we doing?
Prelam goods are about 12%.
12% of the overall sales is in prelam. And within the plain boards, even today, I think almost 65%, 70% of plain boards is 65-70% of plain boards is still interior grade. We need to work more on the HDF side. We are already working and trying to sell more of that. So we feel that in the year to come, we'll really improve in that segment.
Understood. This is very. Thank you.
Just to give you those numbers on the volume and value. The volume for this year, 12 months, premium is 43 and mid is 57 and value is reverse 57 and 43. For the previous year, it was 48 and 52 volume mix and value mix was 61 and 38.
Understood. This is very helpful, sir. Thank you so much.
Yeah, thanks.
Thank you. The next question is from the line of Sneha from Nuvama Wealth Management. Please go ahead.
Good morning, sir, and thanks a lot for the opportunity. Just a couple of questions from my end. When I look at your inventory days, it's up YOY. Also, your payables is slightly up. May I know the reason for this change in trend both on the inventory and the payable side?
Yeah. So, Sneha, clearly, our raw material inventories, both for timber and core, we have increased that inventory in the month of Feb and March, assuming that there will be a pressure in first quarter in terms of on the pricing side and availability. So this was a strategic call which we had taken, and because of that, you see those numbers being spiked.
Understood. And the same way for payables, so like you're getting extended?
Yeah, so similarly, there will be some impact on the payables also. It is the result of the same only.
Understood. Secondly, what I wanted to check is, while you mentioned that you don't expect further drop in MDF realization, from the quarter which has been ended already March 31st till now, have you seen any price cuts by any of the players, if not you? I mean your competition?
I don't think we have seen any further price cut. Sanidhya, have you?
I don't think so.
We have not seen any further price cut.
Okay, so you expect that quarter 1 versus quarter 4, at least realizations are likely to remain stable on a like-to-like products, not playing around with the mix here.
It should.
It should, yeah.
It should remain flat.
It
should remain flat, yes.
Understood. Just one update. Any other entry of new players that you're seeing in the MDF market, or can you actually, specify which other players are likely to, come up with capacity this particular year, just to get some demand-supply trend here?
I think, the listed players are having the large capacities. So Century's inaugurated a large capacity in South, and Green Panel also at the end of the year is planning another capacity in South. These are the ones we know about, the large ones. And Action Tessa also, I think Q3 last FY, they have also inaugurated another line. So yes, I think these are the major capacities, I feel.
As far as the new players
in the South.
Majorly in
yes,
South.
Majorly in South, yes, you're right.
So that way, Greenply will always have the advantage of being the only player in West, at least as on date. And even if
what's the regional sales mix in that sense? Sorry.
So we try to concentrate most of our sales to West and North. Obviously, we do some sales in South and East as well, but that is very limited. Our majority sales comes from West and North.
Would you quantify that for FY24 if possible, like your sales mix regional?
I think almost 70-75% sales is going to come from North and West.
Yeah. East is very minuscule. Yeah, 75% almost would be West and North itself.
Understood. Understood. Thanks a lot, team, and all the very best.
Yeah, pleasure.
Thank you. The next question is from the line of Praveen Sahai from PL India. Please go ahead.
Yeah, hi. Thank you for taking my question. The first question
Hi,
is
Praveen.
related to the... Yeah, hi, sir. First question is related to the plywood. In the plywood segment on the yearly basis, you had increased your advertisement as a percentage of sales. With these, I can see also the realization is almost a flat for an year. So you are more focused on the, the economy side of the business because there also there is a good, improvement, I can say, the trading volume. So what exactly to read to these numbers? Because advertisement you are increasing, your economy segment is improving, your realization is almost the same. So it's a low more for the volume push. Are you doing this in this segment?
No, Praveen, look, as a branded goods player, and especially when we are adding new categories, okay, like we have added MDF. Now we are also looking at adding hardware fittings, maybe a few other things going forward. So the investment on brand has to be continuous. There was a period when we were not investing so much, on the brand advertising and marketing. And as the balance sheet strength is improving, as our capability overall to spend is going up, this investment will continue. See, we may say that, first of all, the logic of the investment is only towards premium segment is not right. It's an overall investment on the brand. So even if you are selling a mid-segment product or we are selling today MDF, what do you see largely as a success, what we have got in MDF in year one? Of course, I think production is something which internally is a success, which the team has driven. But when you look at the sales side traction, it's clearly, the brand. If it was, had it not been with Greenply MDF, I'm not very sure whether we would have been able to deliver these type of numbers in year one. So that shows the strength of the brand. So our investment in the brand has to continue. It will always have an effect on the premium products as well as the value products. So the strategy is very clear that, with deep pockets, this investment has to be consistent and in the range of 3 to 4% of our annual revenues.
Okay, 3 to 4% of your annual revenue, because I am looking at your plywood business only, and they are that's the increase in
Right now, what was happening is since we only had one segment which was plywood, okay, the entire cost seemed to be very, very high, and our capability to invest was also limited to the extent of plywood volumes and business. As we are able to grow and we have added MDF now, MDF will be sizable by the end of this year. So our capability to invest goes up, and in terms of, as I mentioned at the beginning, in terms of percentage to sales for the overall consolidated numbers, maybe even if you are in that range of 3%, it will be a good enough number to as an investment on the brand side.
Got it, sir. Got it. Sir, next question is related to the MDF. As you had mentioned that 200,000 CBM target for 25 on the base of 125. So from where you are seeing a majority of your volume to come in, already Sanjay has already mentioned that you maintain 13% OEM, 87% of a trade. So is that a geographical expansion you will go with? How to bring such kind of a growth?
So Praveen, I'll maybe say, and then Sanjay can add also on the same. First thing, last year, if you really see, we had around a 10-month working. If you truly see, we had a 10-month period. So we get extra couple of months. The brand is already established, right? The network is already established. And our strength is, by virtue of the plant being in West, our strength is West. followed by north, and then by south and east. So we'll continue to concentrate there, and wherever we are now able to do regular business and cater to their monthly requirements, that automatically adds 2 months of sales. And then there is a growth over and above the same, for which the team is working. We are looking at a mix where predominantly 65-75% has to be sold within west and north. And we also maintain that slowly we will see more traction in west, when you will see that now that we are an established player there, we will see more OEMs. We will try to work with the OEMs also to come and set up their shop in that region, so that for them they also get economies of scale. So these are all things on which we have started working upon.
And you are looking only for the domestic demand, not for the export.
See, exports in terms of realization is not something which is very, very interesting at this point of time. We can always do that. If we really feel that we are not able to sell our volumes in the country, then we have that option. We have that advantage and disadvantage, both being very near to the port. So at that point of time, we will look at it as an advantage, being very near to the port, and we can do that. But prima facie, in our strategy map at this point of time, we are not looking at exports.
And also, as a company, we have no export obligations as far as the MDF business is concerned.
Thank you, sir, and all the best.
Thank you. The next question is from the line of Nikhil Agrawal from VT Capital. Please go ahead.
Good morning, sir, and thank you for the opportunity. Sir, what would be your MDF margin guidance for FY25?
MDF margin.
I think we should be in the range of 15 to 16%, because I think this year there's a huge pressure on the realizations. I don't think there'll be any improvement going further on the realization, but we should definitely improve from the existing level of this quarter was 14.1, right?
14.1.
Yeah, so from 14.1, we should definitely improve to anything between 15 to 16%
for the full year.
For the full year, annualized basis.
Okay. See, every quarter we'll be able to improve on our efficiencies, and that will surely help our margins to improve further.
Okay. And so don't you think like the realizations would have an uptick after the BIS norms are imposed? Like, do you not think that can increase the realization on the second half of the year, during the second half of the year?
I think it's delayed to February, the implementation.
Yeah.
So post February, maybe in Q4, maybe half of Q4, we can get slightly higher realization. Definitely there will be a...
I think, it is everyone's guess. Once those things are being implemented, the overall realization should start moving up. If not during the year, but that impact can start from Q4.
Okay, got it, sir. And so any price cuts taken in Q4 for plywood and MDF?
Any?
Price cut.
Price cut?
Yes, sir.
No, plywood, nothing. In fact, as I mentioned that, in plywood, so we are looking at in different pockets to correct our prices. And MDF?
Not really, not a price cut. I think the lower realization is basically on the product mix. It's not on a price cut.
Okay, got it. And so your realizations in the plywood segment, it has gone down considerably for the manufacturing partner segment. It has gone down significantly quarter on quarter. So could you explain what happened on this?
Look, so I'll give you one reason for that is the mix itself, because we had partnered with with two entities which were reflecting those as manufacturing operations. What was Nitin? How do we say that? Business with manufacturing partners, right?
Yeah.
That business, if you really see, has just come down to now around 2% of the total. So some of the products which we thought we will be able to get it manufactured from them and take it to the market, we started manufacturing those which are in the value segment within the factories. So when you will see that, then you will automatically see that yes, the realizations will show some amount of pressure. But the overall realization as a company has not dropped.
Okay, got it. And also lastly, with regards to the MDF segment, have you given any schemes also as such, or was it primarily because of the value product mix that the realizations have got? Have you given any discount schemes to the dealers or something?
I don't think we've introduced any new discount in quarter 4. Whatever was our ongoing scheme is what is continued.
Okay, got it. That's it from me. Thank you so much.
Thank you. The next question is from the line of Karan Bhatelia from Asian Market Securities. Please go ahead.
Hi, thank you for the opportunity. Just wanted to get some sense on the retail and B2B mix for plywood and how has been the growth in FY24 to see.
Karan, I don't have the numbers right now, but yes, B2B business has done well. It has for sure grown over maybe 20% in the last 1 year, and that's what at this point in time I can tell you.
Right. And I was trying to.
It's an opportunity clearly, but when you grow the B2B business, yes, there will be some pressure on the realization also because it's very, very competitive. So there is an opportunity, of course, to grow, but at the same point of time, there is always be a pressure on the margin also.
Right, and I was trying to find the dealer distributor count as on 24. So possible to highlight the net dealer additions for plywood and MDF separately for FY24?
I don't have that number, but I think this year we didn't concentrate on adding many new dealers. Okay, we have a good dealer base, and what we have only tried to do during the year, especially in plywood, is wherever there were opportunities, there were some issues or concerns for which the business was not doing well. We spoke with them and we felt that let's first of all, the dealers who have done businesses with us in the past or who have been doing business but they are not consistent, to work on them to see that how they can become more consistent with us. Because see, in plywood, the one of the challenge always is that there are no exclusive brand outlets. All of them are multi-brands. They keep not only the brands, they also keep Yamunanagar material. So the scope is quite a bit. Okay, it's all about penetration, with the right products.
Right. And sir, don't you think the volume guidance looks slightly on the cautious side? We've seen timber cost move 50% in the last 3 years. A lot of pain at Yamunanagar. So don't you see you're slightly cautious on the volume guidance for next year?
Karan, the issue remains that there are no industry structure data which talks about plywood as a whole. How is it doing? How is it growing? We keep getting this data, information, everything in bits and pieces. We keep talking to you people to get some market intelligence. I am just putting this number at 8 to 10% as a growth number, assuming that there is hardly any growth in the overall plywood business. Some of the people, the industry experts, or maybe who are very much close to the market and all those, well, they say maybe the plywood growth as an industry is only 2 to 3%. But I cannot actually vouch for any of these numbers. So the only way to look at it is that internally we set up a target and we make sure that we are minimum on those numbers, if not more.
Right. And last question from my side, sir. What's wrong with these equity partnerships? They are good 17-18 million square meter, and we are not getting the desired results from there. So how do we want to continue this business going ahead?
You are talking of the 2 JVs which we have done, right?
2 equity partnerships in UP, other side.
Yeah. See, so that didn't go well. Okay, and I think I mentioned this around 3 or 4 quarters back also. We tried to work with them, but it's at times we find that it is not so easy to develop this as a model, and that's where we then again started concentrating back on our own manufacturing strength and pure to pure trading arrangements. So that has not gone well.
Thanks for this input. Yeah.
Thank you, Karan.
Thank you. The next question is from the line of Utkarsh Nopany from BOB Capital. Please go ahead.
Yeah, hi. Good morning, sir.
Hi.
So my first question is for MDF segment. Assuming we operate at full capacity, then also our ROC would be hardly high single digit at the current EBITDA per unit of 4,000 rupee per CBM, which we have clocked in the March quarter. So wanted to understand what would be the sustainable EBITDA per unit for the MDF segment, and by when it is likely to be reached in your viewpoint.
I think 5,500 to 6,000 rupees is a healthy margin where we'll be able to make a decent ROC, and I think EBITDA number will be close to 18 to 20.
Yeah.
Or in the range of 20
to 20, 21, yeah.
18 to 21.
Yeah.
Around 20%, and I think this is a cycle. The industry is putting capacity, and then the capacities will get utilized, and then again people will put capacities. So I think every 2-3 years there'll be a cycle, and in the history also, until 2018, Greenply operated an MDF business also before we demerged. So we've seen a 10-year average of about 18 to 20% EBITDA. So on average, if you see on a longer term period, I think that is what the industry should make to maintain a healthy margin. If we don't maintain that margin, there's no point putting more capacities.
And you will see, look, it is like if the margins come below that, you will see less of new capacities coming into the market, and then you will see a upward price correction, and the margins of the existing players will go up. But as Sanidhya is saying, over a steady state, we always maintain this. In fact, when we had gone to the drawing board also, while we planned for getting into MDF, we always assumed 18% plus healthy margins, to a sustainable margin of 18 to 20%.
Okay.
And if you are able to do that, then I think this business is good enough. But you will get spikes in between when, the 20 can become 24, 25, and then it can again come back to the same 17, 18 levels.
And sir, we were planning to debottleneck our MDF capacity from 240,000 to 3 lakh. So by when it is likely to be completed, and how much cost we are going to incur for that?
So we had given an overall cost estimate in the MDF side of about 50 crores. This included the line extension. However, we have imported the line extension, but we are not able to decide when we are going to extend the line because we'll have to take a shutdown for that. And at this moment, we are not in a situation to disrupt our market. So, there was a timeline in which we had to buy the extension. So, we ended up buying the extension within that timeline from the OEM. But, I think the market scenario will tell us whether we'll be able to do it this year, or whenever we get an opportunity, a window, that time we're going to do it, or we're going to do it whenever we install the second line, which might be 2-3 years from now.
Okay, so my second question is on for plywood segment. Our plant operated at 97% rate in this March quarter. So what would be our peak capacity utilization for plywood segment? And what would be our sustainable EBITDA margin for this segment over the next 2-3 years point of view?
Look, one, we have done some more line balancing at all our plants, okay, which has helped us in terms of improving the capacities. I don't have the exact numbers, but clearly it shows that for this year's growth, we'll be able to cater to our requirement by these, additional capacities which we have been able to create. And that has not come at a huge cost, okay. Also, we'll continue to invest in bits and pieces on the plywood side. Maybe next year, sometime we might even look at either additional capacities by virtue of investments, or maybe look at a new location also. And in terms of margin profile, I think this is one business which should be giving us around 10% margin on a steady state. Anything less than 10% really does not excite at all. So that is the number, the first number which we are trying to now target to reach to 10%, and then for sure to see that we are able to sustain that, and if we are able to go beyond the same. That looks very much possible, because what has happened, if you really see in the last 3 years, the prices of raw material have gone up significantly, but that is not the pass on which has happened in the market. So there is for sure a pressure on the pricing side in the market. And as I mentioned, I think the first call which was happening with Ritesh or Udit, they asked this. I can clearly see, and that is what we have been talking to our, the plantation team and this, The new crop should start hitting sometimes, in H2 of the next financial year. Once that happens, we all might be surprised with the incremental margins, which will be because of the tailwinds. Whatever I am saying you right now is on a steady state, assuming the same pricing trend and other things to go. Also, if you see last year, the price increase, no one had been able to pass on any price increase to the market. So the acceptability of the market now to take certain amount of price increase is better than what it was previous year. So we are looking at multiple factors, positive factors, and that gives me a belief clearly that the margin profiles will improve.
Yeah. Okay. Thanks a lot, sir.
Pleasure.
Thank you. Due to time constraint, that will be the last question for the day. I now hand the conference over to the management for closing comments. Over to you, sir.
Thank you all for taking time to participate in this call. In case of any further clarifications or queries, please feel free to reach us. Thank you.
Thank you. On behalf of Asian Market Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.